Welcome back to the Retire Young radio show. I am your host, Joshua David. Always having a great time in studio jamming about the financial markets, how they work, and how the financial institutions actually move these markets, not the public. Also, don't forget to subscribe to the Retire Young podcast on Apple Podcast, iHeartRadio, and Spotify. So, Al, we're going to bring it home today, especially for a lot of the novice investors, the people that are new to the financial markets. So we have three different categories of people that actually, that listen to the show here. We have people that are trading, that are trading, investing, and they just want to learn more techniques and strategies on how the smart money is creating income. We also have what we call the self-directed investor. They're actively managing a portion or all of their portfolio, like a 401k, but they want to learn more about and be more strategic with their investing. We also have people that are brand new to the markets that may, are thinking about where do I get started? How do I start? What are some of the right techniques or the right assets I need to be in? So let's talk about a plan.
Right.
What are some of the proper steps that somebody would need to do to create a plan? And then what are some of those rules that might want to be in that plan, really to have more confidence getting started investing?
Well, regardless of which of those components or which of those categories that you just mentioned you are in, it requires a plan. The plan is going to be different for everybody, and it will probably change over time. But unless you're trading with a plan, unless you are doing something where here's the bottom line is that you need to identify where you are now, and then what is your goal? Where do you want to be in the future, in 2 years or 5 years or 10 years? That goal, that endpoint may be different for different people, but it's really important to understand, or to, first of all, identify where you are now, where you want to be, and then you figure out how to bridge that gap.
And that timeline as well.
Within the timeline, right. You know what? I think this is a good analogy, and I think we've talked about this before, but it's a lot like a recipe for baking a cake. If you told me to bake a cake and I walked in the kitchen and lined up was a bag of flour, a bag of sugar, some eggs in a bowl, and you said, hey, bake a cake, believe me, I wouldn't know. I would just take a handful of flour, throw it in a bag, or in a bowl, maybe pour a pound of sugar in there.
You have a big mess.
Throw a dozen eggs in. Yeah, I wouldn't end up with the end result, which is a delicious cake. A recipe tells me exactly what to do with each of those components. And that's what an investment plan, an education plan should do. It should take you down a step-by-step process, kind of a set of rules you follow, where you're baking a cake. Maybe you only put 2 eggs in instead of the whole 12.
The baker's dozen, right?
Yeah, but a plan should be something that you follow on an objective basis, taking the thinking out of it, but getting you from point A to point B, while managing risk, preserving your capital along the way. That plan should include that foundational strategy. That's the timing part of it, because regardless of where you are, regardless of whether you have never traded before, you're trading and you're not doing it on a consistent basis, or you're trading and you're doing it consistently, but you want to maybe improve a little bit more, you still need to have that timing part of it that's going to tell you where to get in, where to get out. That's how you that's how you achieve that high probability and then the high profit potential trades. And then it also should include the right assets to use for you for different market conditions. We talked about for long-term wealth, for example, most people have a buy and hold strategy. And for most people, it's a buy and hands-off strategy, buy and hope, buy and pray strategy. Well, you can still have a long-term portfolio. Typically, it will be made up of stocks, but manage it. Be proactive in the management, because there are going to be some components of that portfolio that may be underperforming. Maybe you want to rotate out of those, but each individual asset should have some kind of a protective device associated with it. To be honest with you, with mutual funds, you really can't do that. That's why our students pretty much stay away from mutual funds. Maybe they do stock. Most of them are probably going to end up wanting to, learn more about the futures or the options or the Forex market, even though when they come in, they know nothing about them, and there's a level of fear there. Once they understand how those assets work, how you can have that preservation part of it there, and then how you can take advantage of leverage, then those become very attractive assets.
Yeah, and basically when road mapping, as Al was talking about, you want to focus on some things like you want to learn to define your goals. identify strategies to learn, and then learn how to get started. Al, I want to continue this discussion about a plan, but more on the decision process. Now, we talked about our core strategy, that's designed to help you make better investing decisions. There's also a decision process that you have to go through in placing a trade. We have a software called Click.
Right.
Explain what that software is and how that helps people make decisions with confidence.
Yeah, and this is why Click was developed, really geared towards that confidence level, increasing the confidence level. It was developed by us for our students, specifically incorporating our core strategy. So there's that set of rules you follow. It's a step-by-step process that Click actually takes you down, and the end result is it's going to tell you whether this is a good quality trade and I don't think there's anything else out there, Josh, that will do this. It will tell you if it's a bad trade. How would you like to have something tell you, hey, stay out of this because it violates your parameters. This is not a good trade for you. Staying out of bad trades is probably as or maybe more important as getting into good trades. The point is to have a good quality trade, one that increases your probabilities, the odds of it being successful in identifying the proper profit potential. All of those things are part of a plan, but that decision-making process, really, our goal there was to simplify that and just to take you down step 1, 2, 3, 4, 5, and then take the thinking as much as possible out of it.
And the nice thing about those steps, they're quick steps that you can apply that'll guide you through that process.
Exactly. And so here's a process that you go down. It's going to help you decide whether you want to be a buyer or a seller of something, whether there is a good trend that you want to follow. You probably have heard people talk about the trend being your friend. Well, identifying the beginning part of a trend, the end of a trend, those are important things. Where is the price now located within that trend? The Click will help you identify that. There's a number of things there that have been put into Click, have been created that are geared towards helping you make the right decision and doing that objectively and basically taking your as much as possible your brain and your gut out of the decision-making process, because that emotional component is really probably the most damaging to most people. They react with emotions, and by doing that, they end up doing exactly the opposite of what they should do, which is to buy low, buy at wholesale prices, and sell at retail prices, sell high. Because of fear and greed, the majority of the traders at some point in time, if not on a consistent basis, do the opposite.
Yeah, and that's why that platform, it's called Click, is so powerful. It just helps people with that decision process. I mean, to learn this, you obviously you have to be coachable. I mean, there's things that you may need to train or untrain to be in the investment world. And also you will want to have the proper discipline. Well, this platform, Click, will actually help you with that discipline to make that process much more comfortable. Mm-hmm. Then you have to be decisive. Basically, Click will help you go through that decision process. You still have to click the button. You still have to make that decision, but it's going to help guide you with confidence. Al, you have some great words of wisdom. I'm sure it's not about lean hogs. It might be about something else today.
Nothing to do with hogs.
Let's hear it.
Well, you know what, Josh, there's some fantastic opportunities that we're seeing in these markets. So it's really discouraging when we hear people say, well, maybe I'll do this later. Maybe I'll do it tomorrow. We understand that there's a fear, that there's a concern that people have, and we've built our education around that. This is what tomorrow is, folks. It's a mystical land where 99% of all human productivity, motivation, and achievement are stored. So if you're listening to the show, you're listening for a reason. If that reason is that you think this is something that could possibly provide a benefit to you and your family, why would you risk never realizing that benefit because you sent your opportunity to tomorrow?
Yeah, and basically, if you've been listening to the show for weeks or even years, stop passing over the opportunity. That's that definition of poor. Passing over opportunities regularly. Don't forget to subscribe to the podcast on Apple Podcasts, iHeartRadio, and Spotify. Until next week with the Retire Young radio show, retire young, my friends.